Yo, what is up, YouTube? Right now, I'm in my car. It's 4:30 in the morning. I'm on guard, switching shifts right now. But what we finna go over is we finna go over how to protect your money through investing. So the first thing we're gonna go over is using a stop loss. Y'all already know. Go ahead and comment which one of these strategies y'all use or y'all think is the best to use. But a stop loss is essentially setting a certain percentage you're willing to lose. Like you can either set I I uh I expect to lose 15%, 20%, 30% of my initial investment before I get out of it. So that's like using a stop loss. So using a stop loss could also be on a technical standpoint as well. So say you think price should bounce right here. If price go past this level and don't bounce, your stop loss could be right here. So a stop loss could be a certain percentage you sell out of it or a certain technical standpoint you looking for it to break. So if it don't bounce at this level and it break past this, you know it's not gonna bounce no more. So you sell out. So using a stop loss would be setting a certain percentage to where you get out and you get stopped out. I like to use 15, 20%, or you can set a technical stop like right here. Once it don't bounce here and it go down, you can hop out. Uh, Another way to protect your money investing is don't use the money you need to invest. Because if you a millionaire and you just got like $10,000, you know millionaires don't really be using $10,000. So, or for myself, I could just use $10. $10 ain't really much to me. So if I invest in something for $10, I don't really care if I lose that $10 because I don't need it. So another way to protect your money investing is using money you don't need. Instead of spending $10 at a fast food restaurant and wasting it, you might as well spend that $10 on investing. It's money you don't need, and if you lose that $10, you can't really be upset. Using a regulated broker, like use a broker that is regulated in the United States, because a lot of brokers overseas, when they take your money, you can't really get your money back because you used a broker that's not regulated in the US. So like I heard a lot of stories of people hundred thousands of dollars not using a regulated broker. The broker take their money and you ain't got no protection because it's your fault for not using a broker that's not regulated in the US. So use a regulated broker so that way if your money gets stolen or you have an issue with your money, you know the US got your back. Diversifying your portfolio. So making sure your portfolio diversifies. So say you just invest in all technical companies, right? If the technical market crash, then you're gonna be losing hella money because all you're invested in is in technical companies. But if you invest some technical companies, some cleaning companies, some banking companies, some yeah, investing in different things allows those different investments to carry the other ones. So when you're diversifying yourself, you're basically saying if this market is crashing, this one is going to be doing well. Like say the stock market crash, real estate doing well. So you diversify your investing portfolio that way, but also diversify within stocks. So like energy stocks, if energy crashing, the food stocks going to be going up. If the food crashing, the communication company going to be going up. If the communication company crashing, the insurance company going to be going up. So diversify your account so that way if one thing is going down, your whole portfolio won't be down because you got other things to carry it. It's the same way as having multiple streams of income. Like don't have one stream of income because if that one stream go away, then you ain't got nothing to hold you up. So diversify your portfolio. Put options in hedging. So hedging is basically is investing in something else to lower your risk. So like within the stock market, you got different hedges like index funds, and put options. The first one we're gonna go over is a trust. I guess this is a trust fund. I don't know what to call this shit. ETF, trust fund, whatever. But whenever the stock market is going up, this is going down, right? But when the stock market is going down, this going up. So it went from like 100 $110, 105, all the way to 952. So while the stock market was going down during this time, this was going up, right? And if we go back to the COVID crash, let me go look. Damn, it wasn't there back then. Let's see. That probably was a COVID crash. Uh, but yeah, by hedging your portfolio, you're basically investing in mutual funds or trust funds that go up when the stock market go down. That's a way to hedge. But you can also use put options. So put options is basically you betting for the stock to go down. So if the stock market crashing and you place a put option, you'll be making money because you bet for the market to go down. So that's another way of hedging your portfolio. So just in case the market is going down, you still making money through investing in a mutual fund that's going up or trust fund that goes up, or you're putting put options, so you're making money when it go down. And another way is dividends. So dividends is another way to protect your capital, because if you invest in a company that has been paying dividends for the past 30 years and their stock price is going down, I mean, they still gonna be paying you those dividends, so you'll still be making money off of it. If AT&T load up, I'll show y'all. But AT&T is down, like, I'm down like on AT&T probably like 2%, 3%, something like that. But the dividends they paid me covered that 2% I was down by. So I was like, I'm down on my market price and what I brought it at, but the dividends actually picked me up. So dividends is another way to limit your risk. So those are what 1, 2, 3, 6 ways to manage your risk through investing. I think it's a seventh one. Didn't I have 7? Hold up, let me check. I guess not. But yeah, these are 7 ways to protect your money through investing. Investing is not wasting money, and don't be scared to invest your money. The more you're afraid of investing, the less money you'll make because you're not investing. So if you're scared to invest, grow some balls, leave some comments, ask for more help. But yeah, man, that's it. I'm out. Like this, comment, and subscribe. Peace.